quarter gone by. We're joined by Vinita Gupta, who's the Chief Executive Officer for Lupin, and then Nilesh D. Gupta, Managing Director, Lupin, and Ramesh Swaminathan, Executive Director, Global CFO of Lupin. Good afternoon to all of you, and thank you so much for taking the time out and joining us to weigh in on the numbers. Ms. Gupta, let me come to you first. US has seen some strong growth. What has led to that, and will this growth momentum continue for you, or are you going to stick to your guidance as well?
Yeah, so we said that we will be at $1 billion plus this year in the US, and we are on track for that. And the growth was, a combination of multiple products, Tolvaptan being the largest, given the continuing exclusivity of the product, the 180-day exclusivity, plus Mirabegron was a strong contributor, plus Spiriva. In fact, they more than offset, the low single-digit decline in the rest of the portfolio. So it was a strong growth across multiple products, led by Tolvaptan, I would say.
Understood. And since we are talking about US operations, Ms. Gupta, let's also talk about the tariff impact that you're seeing. What is the sense that you're getting on tariff front with the kind of deals US President Donald Trump is signing with companies globally? Is it best to believe that perhaps the worst is now behind us for India's pharmaceutical sector?
Well, it's hard to really predict for certain, but I'm hopeful based on all the comments we've heard so far in the last couple of weeks, that where generics have been exempted from tariffs, given the concerns on, the disruptions, supply disruptions, as well as inflation on some of the most essential medicines. We hope that that sentiment continues, and generics certainly, could potentially be exempted from tariffs. Versus brands where, the administration has asked for companies to start investing in manufacturing brands in the US. And, multiple companies have made multi-billion-dollar investment commitments to be able to get exempted from the 100% tariff on brands.
Right, Mr. Nilesh Gupta, let me come to you then. We witnessed a soft growth in India. Any fresh guidance here? When will we see a reversal? When will this start picking up? And what's the outlook?
So our growth was 8.8%. The market grew at 7.2%. So we've always talked about growing 20-30% ahead of the market. So largely on track. If you take out the two products where we lost exclusivity, there, our growth was actually 10.5% versus that market of 7.2%. So I feel growth is now nicely bouncing back. In cardio, the market grew at 12%. We grew at 17%. If you for the first half, respiratory, the market 13, as almost 20%. Even diabetes, which we degrew in the past, now we are growing. So our big three therapy areas are doing well. Other areas like GI are shaping well. We actually don't see any material disruptions in the next 6 months, which will round up this financial year and then into the next year as well. So good time in India.
So good time in India. India operations outlook continues to remain very strong. But since we are talking about India operations, let's also talk about margins. And Mr. Ramesh Swaminathan, this question is for you. You reported very strong margin growth in the quarter gone by. If you can take us through, what will your margin guidance be on a consolidated basis for FY26 and for FY27 as well?
Clearly, the margin is really a fact. It's determined by three factors. One is the top line buoyancy, and as you can see, the kind of products that you have brought to the market warrant, in fact, pretty good realizations. The second is the incessant focus on cost itself, and you've been really focusing on every line of the P&L, starting from, in fact, the gross margins, the alternate vendor development in terms of vendors, looking at, in fact, routes to synthesis, rationalization of labor across manufacturing, sales, R&D and the like, focusing on productivity, look at inefficiencies across the entire supply chain, failure to supplies and the like. All of this have actually come down quite a bit, in over the last several quarters. And of course, R&D expenditure, so we have been, of course, focusing on more complex products and the like. So clearly, as a function of all of this, we see margins rising continuously. This particular quarter, of course, the tailwinds have been because of Tolvaptan, Mirabegron, and a number of good products. So clearly, Tolvaptan has exclusivity period, and after that it will come down a bit because of competition and the like. So it's not as though the margins would be sustained at the current levels, but we do expect for the full year to round up at around 26%. And given the focus on getting new products in and looking at costs, we would imagine that it would certainly there'll be a secular trend in terms of margin expansion. Next year, for example, we believe that it should be in that 24 to 25 range. And going forward, there would be expansion, but there could be periods of volatility amongst various quarters.
Right. Ms. Gupta, also the EMEA market is up significantly. Will this growth momentum continue for you?
Yeah, we're very hopeful to sustain the momentum, just given that we are much smaller in EMEA compared to our peers. So I think we have headroom to grow. We also have a very strong portfolio of complex products, whether it's respiratory, which has been the biggest growth driver in the last couple of years, but now going forward also biosimilars, which is a material opportunity for us in Europe, and now specialty, given our announced plan to acquire Pharma, the ophthalmic company in Italy. That also allows us to leverage our portfolio, both the Lupin portfolio into the geographies that Pharma is, Italy and Spain, where we don't have any presence, as well as the ophthalmic portfolio of Vizu into our geographies. So we see we're very optimistic on continuing the growth momentum in Europe in particular and EMEA as well.
All right, so the growth momentum is likely to continue in Europe and for India operations as well. But Ms. Gupta, if you can take us through any big launches that are lined up for the second half of this year, and how do you expect them and these launches to aid your financials going forward?
So a number of product launches lined up. I mean, we have just recently launched Liraglutide in the US, getting ready to launch Risperdal Consta, our first long-acting injectable product, also the first from India. Very pleased that on these injectables front, we've been the first to get approval for products like glucagon, liraglutide, as well as Risperdal Consta, that will enable us to really grow the injectables portfolio. And then next year, we're expecting biosimilars to start contributing to our business. Pegfilgrastim that we are waiting approval for, that hopefully in the next 3 to 6 months, we should be able to hopefully get that approval. And then ranibizumab, Lucentis biosimilar, that we have a goal date for middle of next year. We also are very optimistic about building that product, given now our focus on the ophthalmology specialty as well, allows us to bring a broad portfolio of specialty as well as ophthalmic biosimilars to market. So those are just few, and there are many more, but few of, I think, the existing portfolio, continued performance of products like Tolvaptan, Mirabegron, that even with additional competition will still be limited competition, plus injectables portfolio ramping up, plus biosimilars starting, and then specialty picking up with ophthalmology. We feel very good about the growth momentum going forward.
All right, on that note, thank you to all of you all for joining us and weighing in the numbers and the roadmap ahead for Lupin. But with that, it's time for us to slip into a short break.